Happy Hump Day. This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation on Bitcoin all the time. And I'm your host, Christine Lee, taking a look at our top stories. Just now, the Federal Reserve announcing the U.S. Central Bank will leave things unchanged and keep interest rates at near zero, citing progress on vaccinations, as well as strengthening economic activity and employment. The decision concludes a two-day closed-door meeting by the Fed's Monetary Policy Panel, known as the Federal Open Market Committee. And Goldman Sachs identifying 19 big-cap stocks with exposure to Bitcoin that have outperformed the S&P 500 this year, such as MicroStrategy, Coinbase, and Tesla. On average, the stocks climbed 46% year-to-date versus 12% for the S&P 500. Notably, the average lagged behind a direct bet on Bitcoin, which gained 89% over the period. And taking a look at Bitcoin, well, trade blocks indexes are now the CoinDesk indexes. So the CoinDesk Bitcoin price XBX index right now is trading at 55,000 and some change. Bitcoin is trading pretty flat over the day, not really doing much. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
So Bitcoin's bull and bear cycles were getting shorter until now. Taking a look at this chart brought to us by the CoinDesk data team, one of Bitcoin's most infamous bear crashes followed the 2014 bankruptcy of Mt. Gox, and we see that over there. It was the biggest crypto exchange at the time. We then saw an extended period of growth fueled by the initial coin offering boom, but from then on out, it seemed Bitcoin's cycles were getting shorter. Some experts said that was because the market was getting more mature, more stable, and Bitcoin was seeing less volatility. But now we are seeing a BTC extended rally brought on by institutional investment and innovation in the space. And joining us now to discuss is CoinDesk Director of Data and Indexes, Galen Moore in Boston. Welcome there, Galen.
Thanks, Christine. Good to see you.
Good to see you. Okay, so you had a hand at creating this chart. So give us your reading on what we should extract from the length of Bitcoin's bull and bear markets.
Yeah, I think, the first thing is Bitcoin is doesn't really apply to the traditional definition of bull or bear. The shift typically is indicated by a 20% rise or drop. It's somewhat subjective, but at least in Bitcoin's case, we've seen two drops of greater than 20% following all-time highs so far in 2021. The first one was in January. On January 8, the CoinDesk index's XBX had a closing price of 40,652. And by January 21, it was down to 30,807, which led to some people to say we are in bear market conditions. As it turned out, not so much. So the dip of this past Sunday, where the price recovered fairly quickly, may be the beginning of a kind of a bearish condition or simply just a kind of a little dip on the way up to further heights.
I wonder then, what would you define as, when we're in a bear market, since, the normal rules don't apply?
So we looked at this as being a 20% change followed by 90 days during which the former price was not recovered or was not, so it depends. I guess recovered indicates simply you're going down, right? So if we keep going down from this, say that the $64,000 high was the beginning of a bear market, but I think we need another we need to have a longer time period in order to really tell that with Bitcoin.
Well, what do you think is the significance of this extended bull run we're seeing?
Bitcoin does seem to move in patterns, right? And I mean, today's news from the Fed is maybe an example of how, there have been many attempts over the years to tie the price to different conditions in the market, different macro conditions, correlations to gold, to the stock market, to various news events. I think all of them end up getting disproven over time. Bitcoin moves on its own pace, it seems. And looking at some of the patterns in the length of these cycles can be pretty instructive in terms of thinking about, okay, well, what kind of regime are we moving into now?
So let's take a look at Bitcoin's volatility cycles. Here we go. Bitcoin could be in for a long cycle or of mid-range volatility. What are you seeing here?
We got even more creative with this one and sort of wanted to look at, define kind of, are we in low volatility Bitcoin, medium volatility Bitcoin, or high volatility Bitcoin? And as it turns out, so Bitcoin kind of goes between about 50% 30-day volatility up to about somewhere over 100%. So we define the high volatility periods is 100%. The mid-range is between 50% and 100%, and the low is being below 50%. And right now we're at the bottom end. We're in a period that's been at the bottom end of that medium range. We've been there for, I think at this point, it's 46 or 47 days. And we're getting up toward kind of the average length of what these cycles of volatility seem to go by. So I think it's another time to look at, okay, are we going into a period where, Bitcoin remains in stasis before shifting from low to high or medium volatility for a longer period of time, or are we moving into a space where that, those cycles turn over more quickly?
Okay, so that has yet to be determined. Yeah. Well, we heard from the Fed Reserve saying that they will keep rates at near zero. There is kind of discrepancy or speculation that they may or raise rates eventually. Canada is taking a stance where they will gradually raise rates, whereas Europe is having a more wait and see stance. What does this what is your take on what's happening with the Fed and its significance to Bitcoin?
I'm very skeptical of narratives that tie movements, day-to-day movements in the market to what Bitcoin is doing. I think if the broader economy in the U.S. and globally thrives, then Bitcoin will do well. If we do see an extended downturn, I think it's likely that more high risk, more risk-on assets like Bitcoin will suffer. All that said, the main takeaway I thought from Chairman Powell's comments was that for now anyway, health data is really economic data in the U.S. and around the world, and we need to be watching the pandemic numbers very closely.
Well, at the same time, people believe that if rates stay at near zero, there's a lot of free flow of money out there. People are concerned about inflation, and so that propels the price of Bitcoin.
Maybe. I think more the price of Bitcoin depends on people's, desire for a speculative instrument. As Chairman Powell has said in the past, right? It's a speculative store of value. So the idea is that Bitcoin will become a hedge against inflation. But I find it hard to believe that somebody would be, that a large group of investors is really socking money into Bitcoin as a hedge today. At some point in the future, Bitcoin will become that hedge. But we haven't really reached that inflationary condition yet. And Bitcoin hasn't really lived up, with its volatility, as we just saw, Bitcoin hasn't really lived up to that hedge against inflation kind of a use case that people anticipate it will achieve.
Okay, well, President Joe Biden will address a joint session of Congress for the first time tonight and is expected to praise his administration's accomplishments in the first 100 days of office and unveil key parts of his new legislative push. He is expected to propose raising capital gains taxes for millionaires. The top rate would rise to almost 40% from 20%. This money will go toward education as well as child care funding in the upcoming American Families Plan, which has an estimated price tag of about $1 trillion. So I want to get your thoughts on this tax and spending plan and how it will impact Bitcoin.
I think capital gains taxes in Bitcoin is a huge issue. And you can look at something like the Grayscale Bitcoin Trust or other similar products, right? The GBTC premium reflects the desire of people to get into a product that they can access via their brokerage account, via their individual retirement account. Bitcoin is not accessible via those methods, at least to date, right? So the desire for a Bitcoin ETF, CoinDesk Indexes, as you know, provides data for ETF issuers like Purpose Investments in Canada and also for Grayscale Bitcoin Trust. And I think we're going to see increased demand for that as long as the pressure is on for people having to pay high tax bills on their Bitcoin gains.
All right. Galen, thanks for joining us this afternoon. And just a note to viewers that Grayscale is a sister company to CoinDesk.
Thanks very much, Christine.
All right, that was CoinDesk Director of Data and Indexes, Galen. More coming up, a look at companies putting Bitcoin on their balance sheet. Awesome.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money in a live virtual experience. Consensus by CoinDesk. Register today.
Welcome back. NEXON, a major video game company trading on the Tokyo Stock Exchange, announcing its purchase of $100 million worth of Bitcoin with the goal of protecting shareholder value and maintaining the purchasing power of cash assets. The Bitcoin buy represents less than 2% of NEXON's total treasury. And joining us to discuss is Luke Sully, CEO of Ledgermatic, a platform that helps companies hold crypto on their balance sheets in a compliant way. Welcome, Luke.
Hi, Christine.
So would love to hear your comments on this latest announcement from NEXON. It's generating a lot of excitement in the Bitcoin community. They are publicly traded. They're a publicly traded firm and a big presence in Japan and South Korea. So how do you view the significance?
Well, it's really interesting. I think for us, we're still in the stage where there's a number of sort of maverick CEOs that are continuing to put Bitcoin on the balance sheet. But there's a couple of really interesting takeaways that we found from Nexo. One is that predominantly they have a lot of experience working in intangible assets. They have a lot of IP on their balance sheet. And so they felt very comfortable operating in that regard. But they have actually classified Bitcoin as a cash equivalent, which is usually used as sort of a short-term investment asset. So very different to how US publicly listed companies like Tesla are accounting for the asset. I think the other important takeaway we found is that compared to other high-yield investment strategies that they could deploy, they saw Bitcoin as no more risky than anything else that they've done in the past. And so their hypothesis was that it wasn't a greater risk than anything else they've done to generate a yield before. So they were going for a Bitcoin strategy. And again, as you said, the third point is that it was a non-material holding of something like 2%. So for them, there was a certain amount of risk management, containment of risk, that made them feel comfortable that they could experiment with this asset class.
Okay. Meanwhile, Tesla sold about 10% of its initial $1.5 billion investment in Bitcoin in January, turning a nice profit. CEO Elon Musk tweeted that the company wanted to demonstrate the liquidity of Bitcoin as an alternative to holding cash on the balance sheet to other firms with comparable cash on hand. So if companies or institutions were skittish on Bitcoin, do you think this demonstration will warm them up?
Well, you've got to hand it to Tesla. I mean, they have some excellent foresight when it comes to buying and selling in the market. And again, they have a slightly different strategy to Nexon. So they have a hybrid strategy, which is what we call it, where they have both. They accept Bitcoin for revenue as revenue for payments, and also they hold it as an intangible asset on the balance sheet. I think if I was a CFO looking at Bitcoin and Tesla's experiment right now, I would probably be asking myself, did the price of Bitcoin spike because they bought the $1 billion in BTC before Christmas? And did the sale contribute to the sell-off last week? And that sort of raises a more fundamental question, which is, can this model be replicated by other companies at this sort of scale? So what I mean by that is, can CFOs really go and buy $1 billion of Bitcoin without moving the market? Can they conduct this type of block trade, retaining the sort of privacy they would expect in the money markets in the current crypto infrastructure? And I think that question is still outstanding, and we'll wait to see how that rolls out with other companies that start to move in.
Yeah, it'd be interesting to see the data on how they sold, how they bought, and over what time period that was. Another challenge is the tax consequences. So, Nexon saying that they consider BTC a form of cash along with US dollars, Japanese yen, and the Korean won, but certainly tax authorities don't think so. So how do you square that dissonance? Should regulators reevaluate how they treat Bitcoin? Maybe it should be a currency and not property.
Well, again, that's up to the individual regulators, and we're seeing that there's definitely regulatory arbitrage when it comes to asset classification and the implications on tax. I'm here in the UK, and there's still a debate around those particular topics. I think what it does mean is that CFOs, treasurers, and compliance and regulatory officials within organizations need to need to be extremely vigilant about how the asset is actually accounted for and therefore taxed over time. And it's still a moving target. I think you've seen in Turkey and in India very recently, extreme measures going towards an outright ban, whereas I think the US now has started to come to terms with a coexistence of fiat and crypto. And that actually presents a lot more opportunities for businesses moving forward as they start to sort of dabble into this asset class.
And I'm curious, what kind of companies are approaching you who are interested in putting crypto on the balance sheet?
It's a whole range, actually. I think, we've seen Fortune 500 companies, mid-cap private companies, and then I say traditional crypto companies, but folks operating in the crypto industry. And they're all looking at it in slightly different ways. So what we're seeing right now is a Bitcoin on the balance sheet is just one asset and one single use case. I think when you step back and look at it from 30,000 feet, CFOs and treasurers, they still have a number of traditional problems that they're trying to solve, right? They're trying to move money around the world in a cost-effective manner. They're trying to reduce their working capital cycles. And they're trying to battle against local currency depreciations and FX volatility. And so what I think digital assets and on-chain finance actually offer is a parallel channel for corporates to operate in this space to mitigate some of these risks. And I think what we'll see over the next few years, particularly as CBDCs start to come to the forefront, is, for us certainly, is to offer the ability for corporates to interoperate between crypto and fiat. And hopefully, CFOs in 3 years' time will be able to have, a global exposure management system in place for crypto and for fiat, so they can start to deploy and access new liquidity as part of their investment strategies, or to use stablecoins or CBDCs as in low-cost payment corridors. So I think the future is really exciting, and we're hoping to kind of accelerate that progression for them.
It reminds me of the Medium post that the NEXON CEO blogged about. He said, companies really have to think about whether or not they can rely solely on the current currency legacy system, or whether they should think about exploring the new one. Anyway, thank you very much for joining us, Luke. Appreciate your insights.
Thanks for your time.
Right, that was Ledgermatic CEO Luke Sully. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.